Hello everyone. Today we learn about classification of accounts. Now we all must be wondering, in the previous lecture we had learned about this. But in the previous lecture we had learned about traditional approach. Okay, where we had learned three types of accounts, that is personal account, real account and nominal account. Now after that we had learned about the golden rules and the journal entries associated with these three types of accounts. Now today we'll learn about modern approach. Okay, so here we have five types: assets, liabilities, capital, expenses and losses, incomes and gains. Okay, now you all know these terms, but still learn this. Okay, so the first one is assets. What are assets? Assets are the properties or things that the business owns. So what can a business own? A business owns a business owns land and property, building, machinery, furniture, even cash and bank account will be called as assets because the business owns this. Second one is liabilities. So what are liabilities? Liabilities are those things, expenses that the business has to pay in the future. Now the business owns it, but later in the future it has to pay. Okay, so a capital can be known as liability because today the business owns that capital, but after the business shuts down, the capital is payable outside the business to the owner. Okay, so that capital is liability. Even bank loan, the bank gives you money, so you receive it, but tomorrow after the maturity date, okay, you have to pay that. So all those will be known as liabilities. So here I have written the examples: creditors, bank overdraft. OD means bank overdraft. Now what is bank overdraft? Bank overdraft is a short term loan that you take from the bank. Okay, suppose you have to pay 10,000 somewhere outside, but you don't have, so you take a bank loan, okay, for say 60 days. So after 60 days you have to pay that bank loan. Okay, bank overdraft is short term liability. Then bank loan, as I said, and outstanding expenses are also liabilities because tomorrow you have to pay those expenses. For example, salary you haven't paid for the last month, so this month you have to pay that. Okay, so it's outstanding. Once you pay that, that will vanish from the liability side. Then third category is capital account. So what is a capital? Capital is whatever the businessman invested in the business. Okay, so in the beginning the businessman invested 1 lakh cash. Okay, he or she had invested machinery. She had invested furniture. Okay, brought in furniture in the business. All that will be known as capital. Why? Because that helps the business to run. Okay. Then the fourth category is revenues and gains. Okay, so what is revenues and gains? Revenues and gains are whatever the business receives. Okay, so if the business earns some commission, okay, so that commission will be considered as revenue. If the business earns profit, then that will be considered as gains. Okay, so examples are commission received account, dividend received. Now what is dividend? If you all are investing in shares, then like in bank you receive interest. Here in case of shares you receive dividend. Then rent received and interest received account. All these will be revenues and gains. And the last one is expenses and losses. So what are expenses and losses? All that you have paid. Okay, say for example, electricity bill, you paid that, therefore it is that is an expense. Okay, then wages or salaries, both will be considered as expenses because you have to pay. Okay, then audit fees, loss by fire. Loss by fire is basically an expense, but it is not actually an expense. You have not paid it, okay, but have incurred that. So that is also considered as loss. And then this is printing and stationery account. Okay, printing and stationery is also an expense. Okay, suppose your machinery it has to be depreciated, then that depreciation will be considered as a loss. Okay, in gains it will be appreciation. So I hope you all have understood this video, and thanks for watching the video. Please like, share and subscribe.